Hello and welcome to Ecoholics. Today we'll discuss the important thing regarding the non-performing assets. So the heading for the today's lecture is the NPA, popularly known as the non-performing assets. So the non-performing assets we'll discuss, and we'll discuss the current situation of the NPAs. Now NPAs is very important because if you understand the basics of NPAs, like suppose this is the sector which is called the banks. What banks are receiving, that is the deposits, and what they are giving is the loans or the advances. So here we have the savers, those who save the money, and here the borrowers who borrow the money. What will happen, because the banks are having the liability on this side and assets on this side. So we can understand that if the money is flowing into the bank and bank is giving money to the borrowers, because banking sector is acting as an intermediary. Now what will happen if this loan will not come back to the banking sector? What will happen? Because savers can always demand their money from the bank, because these are having the demand deposits, it means on their demand, and the time deposit. So if a particular time period is over, then they need their money. So there will be a mismatch of the funding. So mismatch of what is called the asset and liability mismatch. Now asset and liability mismatch is very important because these are the assets. Loans are the assets for the bank, and if these assets are not performing means they are not yielding income for the banks. Banks are not getting the interest rate or the interest amount and the principal. So principal amount and the interest amount. So we can say that principal and the interest rate that they are not getting. So the non-performing assets means their assets are actually not performing. Now this was the basic. If you see the NPA, NPAs are important. NPAs asset cycling. If you see, it is reversing in the recent quarter. Reversing means the situation of NPAs when it goes down, it means the situation is improving because your non-performing assets actually declining. But in the recent quarter, we have seen quite a turnaround that NPA is now making a U-turn and they are actually showing the rate of increase. Now there are a lot of we can say reasons behind this, but Reserve Bank of India actually reported that the credit quality has been deteriorating. What is the meaning of the credit quality? Credit quality means the quality of loans. So quality of loans, it means these loans are actually, suppose a firm is taking certain loan, suppose the loan of 1 CR, and this firm is not doing well, it means they are not earning enough profit. What will happen? They are not able to pay back on their loan. It means that quality of loan will deteriorate. So that is the meaning of the credit quality, and according to RBI report, it has been deteriorated. This is a report given by RBI in June 2019. Now we see that NPA is making a U-turn, and this U-turn is visible in all the sector except for industry. So industry, the NPAs are getting down, but apart from other sectors except industry, that NPA is making U-turn. Although central bank did not provide any numbers, but you can say with the monetary policy committee report that they have seen. So October 2019 monetary policy report, they have given this important interpretation that I am sharing with you. Although we can say that NPA, gross NPA, so gross NPA is actually closer to 10% this time in October as we compare to 9.3% in March 2019. So gross NPA has increased. What's the meaning of gross NPA? Gross NPA means NPAs which are having plus the restructured loans. What's the meaning of restructured loans? Restructured loan means if suppose a firm, the same firm, if we take the example, is not able to repay their loan. This restructuring of the loan means we will increase the time duration of the loan as well as we will reduce the amount of EMI per month. So that will give certain kind of ease towards, we can say, the firm as well as towards the firm. There's a favor by the banks. Now if you see that this increase has been followed by the 4-quarter successive decline. So it means last 4 quarters the NPA has been decreasing, but we have seen a slight increase in this quarter. Obviously we can say that there are certain reasons like the financial health of the banks, that banks are struggling, although government recapitalized those. But think about two important things, that the impact of the rating agencies, and the second is about the stressed corporates. So the first one is the methodology, regarding the methodology, because these rating agencies are actually not giving the exact rating, the perfect rating for the companies. So they have downgraded a lot of banks in the financial sector, and the financial health of the certain banks. And regarding the stressed corporates balance sheet, it's just because of the weak demand. So the demand is weak in the economy. Now if there is a weak demand, it means there's a deterioration in the asset quality. So asset quality is actually deteriorating. It means the banks, the risk of the companies are going up. So this is, we can say that the bottom end of this particular whatever we are having is from the non-banks to banks, because before the IL and FS crisis, the NBFC credit grew quite manifold. But after this crisis, since October 2018, the credit is now flowing from NBFC to banks. Now people or the companies are preferring banking sector. This is, we can say, the stressed corporate balance sheet is just because of the weak demand in the economy, and this weak demand is generally, we can say, driven from the consumer durable goods as well as the automobile sector. Now if we see that the lending which has increased the gross NPA, but if you see the aggregate NPA, they do not reflect the underlying stress. Now if we see the RBI's framework resolution for the stressed asset, that they are saying that we should initiate the default. Default means whenever a company is not able to pay back their money. So you can say that the default whatever we are having, so that default process must be initiated on that particular resolution before a company faces the situation of default. Suppose a company is expecting that that company is suffering loss in October 2019. Now you know, if loss will continue for 6 months, that company will face the default in 2020. So what RBI is saying, that we should initiate the resolution around November and December. We should not wait for the March to come when the company actually face the default condition. Now this is obviously complete discretion of the any organization, but what we can do is we can restructure their asset liability mismatch so that this deadline may be extended and the company will get the opportunity to actually save themselves from the position of the default. Default means the total loss, the wind up that they are not able to repay. Now obviously it will help in alleviating the stress, as well as we can say that recognize the assets that are not performing. Now because why? Because firms as well as the banks are actually not opting the IBC route, that is the route for insolvency and bankruptcy code, because it actually brings a lot of unanticipated complications, and that provide the long resolution plan. So that is why the companies, firms and the banks are actually avoiding the IBC rules. They are preferring that we should have the certain things, so provisioning is the better option. Now if you see the credit growth in MSME, that is micro, small and medium enterprises, that also will remain under unrecognized, because one-time restructuring allowed certain specific defaults that classify their standard assets by the March 2020. So you can say that these kind of things will put certain restrictions for NPA for few times, but we need certain things so that the NPA cycle will perform and we will able to prevent the full blown crisis in the NPAs. If you see that the emergence situation that is very visibly vulnerable, the mainly we can say the real estate sector. The real estate sector, we have the crisis in NBFCs, because NBFC are the major fund provider for the real estate sector. So the demand in real estate also declined, so that the NBFC credit demands also actually declined. Now if you see government efforts, government has actually taken substantial efforts like for the resolution plan. So that resolution plan includes the merger from 27 public sector banks to 12 public sector banks, the recapitalization program. What's the meaning of recapitalization program? That is, we are giving the capital again to the public sector banks. So 70,000 crore is the latest recapitalization plan that government announced for the public sector banks. But their economic condition continue to deteriorate. Although NPAs plays an important role. Now we can say that the talking about banks first. If you see the rising NPAs, the real credit growth actually slows down. Now, this credit growth actually slows down when we can say even comes to a standstill in some of the sectors or some of the cases, because the balance sheets, what is the components of balance sheet? These are assets and the liabilities. If liabilities are more, it means that balance sheets are weak for the banking sector. So we can say that real growth in 2006 period to 2011 period, the real growth averaged around 12% per annum. But after that, with a lag, that real credit slowed the growth since 2012 to 2016 to 4.5%. So you can see almost half. That is why, because banks are having short of capital. So they are facing the liquidity crisis, shortage of the capital. Now here we can say that the real lending picked up last year, that raised about, we can say in 2018 to 9%. But recently in this that is April-September 2019, April-September 2019, the real credit growth declined to 5.5% again. So we can see on the back of the NPAs have been increasing, and banks are also cautious in lending excessively. So that is why we can say that banks are struggling with the crisis. Now talking about NBFCs, NBFCs plays an important role where banks are not, because NBFCs like also shown the similar pattern for the NPAs. Now if we see the all NP and all NBFC which are working in India, if we see in 2014-15, the average real credit growth was 11.6%. Although these data are not important, but to understand the trend, these data are very, very important. If we see the data of 2015-16, that real credit growth shot up to 17.5%, followed by in 2016-17, it rose to 15.2%. But you can see that last year, when 2018 August there was an ILFS crisis, that declined approximately quite a manifold, and almost the credit growth declined to 9%. So that is, we can say that NBFCs are also struggling because their NPA ratio has been declining, as well as excessive regulation of their resilience and the stability by the RBI. Because after the ILFS crisis, RBI is now more vigilant towards these NBFCs. For the ILFS crisis, I have made one live session. So you can see in the video section that video on ILFS crisis, where I've explained all the crisis in detail. Now we see that what we can do now NBFCs, as we are saying, that they are struggling with two important things. First one, the question about the funding. Their funding resources, generally their funding comes from the banking sector as well, so banks are also struggling, and they are having the close scrutiny over their funding sources. The second thing is the asset liability mismatch. Why asset liability mismatch? Because in ILFS case, what happened? ILFS was borrowing in the short term and lending for the long term. So that's why if you're lending for the long term, it means that loans will come later and your depositors are in the short term, so you have to pay regularly. So that's why there's a problem of the asset liability mismatch. Now if we see the credit growth, or from the viewpoint of the financial stability report of June 2019, if you see, it is available on RBI's website, that the financial stability report, very important report. In this report, what RBI has highlighted, that the important things about the re-examination of all the banking sectors or NBFCs, that the NBFC and banks are struggling. The key drivers for the growth or the real assets are, we can say, that these loans should perform better, and for that the most important thing is that demand in the economy should go up. If the demand will not go up, there will be a problem like over leveraging. What's the meaning of over leveraging? It means the high amount of debt compiled by these NBFCs, banks, as well as the companies. Now here, what are the solution? Like the number one solution that we are having is the provisioning. Now what's the meaning of the provisioning? You must have come across with this term in the newspaper. The provisioning means, suppose you are having the liabilities of three kinds. Suppose the liability of loans the particular company is taking. Suppose this is a firm ABC and they have taken the loan. They have certain other liabilities, and so we can say XYZ or the ABC. So here we can say that this is a company ABC, so we can say this is something PQR, another type of loan. But you know that this loan is very important. So whenever you have certain amount of loan for a particular company's or organization account, we know that this liability will go up. So we have to set aside certain amount of money. Suppose this loan belongs to, suppose, 10 lakh rupees. Now this provisioning means this company ABC should set aside 10 lakh rupees because they have to pay back these loans. So this is what we call the meaning of provisioning. So what RBI is saying, that companies should work towards provisioning, as well as banks also do this, because if they are not doing these kind of things, the asset quality will not go up. Regarding other things, if you have seen that in the Punjab and Maharashtra cooperative banks, in that particular cooperative bank there was a crisis. Why? Because they were underreporting their asset quality to the RBI. So doubts can be resurfaced, or the qualities of the disclosed assets should be properly scrutinized. If you see that there's a loss of faith in IBC as well, Insolvency and Bankruptcy Code, so government should think about the IBC, that is Insolvency and Bankruptcy Code of 2016, that why these companies are actually avoiding the route of the Insolvency and Bankruptcy Code. And you have to see the past behavior of the lenders as well. Now, in order to streamline the credit into the economy, which is very vital to spur the growth back on track and to reach the target of $5 trillion economy by the year 2024-25. This is very vital because credit plays an important role. If you see the first slide of this mismatch is very, very detrimental from the India's economic growth. So this is, we have to unclog the credit pipelines, the financial fragility that we need to actually avoid for the growth. So that's it for today, and if you have any doubt you can always ask. So we'll take doubts one by one. So there's a doubt, one term 90 days has not been serviced. Yes, obviously there's a category of NPAs, non-performing assets, and in that category the first category is about the 90 days. If the interest doesn't come to 90 days, then it comes into the category of NPAs. But there are certain other categories. So first, that bank should provide the quality, the information. They should undisclose, or they should disclose rather, they should disclose their asset quality in due time. The next part of the question is, so the India is right now suffering from the twin balance sheet problem. TBS means twin balance sheet problem, where both the bank and the private corporation sector were stressed. So understand this very important question, a very good question. If you see the period of 2003 to 2008, that was the golden period of India's growth rate, where India grew around 8.5% on an average at GDP growth rate. So that was the GDP growth rate. What happened at that time? Banks were over enthusiastic, and what banks were doing, they were lending freely. without actually doing proper survey, proper cost benefit analysis, especially to infrastructure sector. Under infrastructure, we can say the steel as well as iron and steel industries, etc. So we can see the example is of steel. Now, if you see that banks lended into infrastructure sector heavily, infrastructure sector lending is, is the long-term lending, and deposits are always short-term. So we can say that between 2003 and 2008 period, it is very vital that banks should be careful. But what happened in 2008? There was a global financial crisis. So global financial crisis, this means these steel industries were not able to export from India. And if their exports declined in 2008, what happened? They are not able to repay their loans because of decline in the profit. Decline in the profit means non-payment of the loans. Non-payment of the loans means banks are not receiving their interest as well as the principal amount. Again, the banks is struggling with the problem of the extra liabilities of the depositors and not having enough assets to actually pay off their liabilities. So that is what we call the twin balance sheet problem, where the balance sheet of the financial sector, mainly we can say banks and the corporations, the companies, both are struggling because companies are not earning enough profit, so that's why they are not giving back their loans. So this is in short, we have the problem of twin balance sheet, a very important concept, is still relevant for the examination. So if you have any doubt, you can ask. Again, any suggestion, anything you want to say regarding this lecture, you can always ask. Again, the question is, what about the para's rules? What is para? So the full form of the para is Public Sector Asset Rehabilitation Agency. So I'll write the full form for you. Public Sector Asset Rehabilitation Agency. Now this is an independent entity within, we can say, that identify the largest and the most the vital NPA accounts that the public sectors are having. So we can say that these are held by banks. So what is the main role of para? That if banks are having the NPAs, it means that para will buy the bad debts from the banks, so that banks are able to free up their balance sheet and they can able to, or they will be in a position to lend fresh loans. So that is the main role of para. It is expected to solve, there are two important problems, like that the increase in the fresh loans that they are having, or that this para wants to become the main bargainer or the borrower of, we have the most stringent reforms. So the more important thing, that they will cut down the NPS. It means that para will free up the balance sheets of the banking sector. So para is expected to raise the capital buyouts from the issuing government security. This is how the para will get the funding from the government securities, or we can say capital marketing, as well as certain infusion from the Reserve Bank of India. So more or less, you say that suppose this is a bank and this is a balance sheet, liability and assets. If suppose the banks are holding the assets of 100 crore and the liability of, we can say, 200 crore, then obviously this is a mismatch. If suppose banks will give another 100 crore loan, so that is the balance sheet which is in balance. Suppose this 100 crore loan defaults and not able to come. So what para will do? Para will buy this asset from the banking sector, suppose at the rate of 80 crore. So the bank's loss will be only 20 crore. What will happen after that? This 80 crore will move towards fresh lending. So the NPA also declines, as well as banks are able to function well. So this is in short, we can say that para is known as the bad bank. So this was the concept given by our former CEA, that is Chief Economic Advisor, Arvind Subramaniam, and he initiated the idea of bad bank, but it did not come into reality, we can say, and this bad bank concept is still in the pipeline. So we don't have any clarity on this bad bank, because there are important reasons, like who will fund the bad bank. It will be private or the public. If it is public, it means it uses the public sector funds, the public money, the taxpayers money. So again, more or less the same thing, same as recapitalization. So we can say obviously this is a haircut, so 20 crore is the haircut for the banks. So that's it for today. Anything ask, anything you want, you can ask. So again, we are meeting daily at 10:30 p.m. That is from Monday to Saturday, regarding the current economic discussion and analysis. Current economic discussion and analysis, which is relevant for mainly UPSC examination, both for IAS General Studies and Economics Optional, and for Indian Economic Services. Apart from this, we are having the courses available on our website, that is the Economics Optional, Indian Economic Services, UGC NET examination, econometrics, mathematical economics. Will get the expertise regarding these important examination. And apart from this, you can follow us on our social media handles, like especially the Instagram account, where we have daily question facility, and on our website you'll find the study material, data, etc. Apart from this, you can also contact directly to me on this WhatsApp number given on your screen if you want to ask anything regarding the examination or the anything which is related to the economics. So till then, see you soon tomorrow at the same time, 10:30. Good night.